All right, let's jump into it. So, if you've been here for the other lessons about building and scaling your business, this is lesson 3. Don't worry if you missed the first 2 lessons. They are on the one blog for you to catch up on. But this week, we're going to be talking about managing taxes and expenses. So we have been going through all of the important factors that you need to think about when being the CEO of your business. So I know we're all realtors, and that is what we do, and we are real estate agents. But this is really about taking a closer look at the structure of your business and how that can equate to additional revenue in your pocket and also better work-life balance. So today we're talking a little bit about taxes and expenses, which is something that you, as a real estate professional and as the CEO of your business, should really be spending some real time tracking and managing. I can't tell you how many times I speak to an agent, whether that agent is brand new or seasoned, and I ask them, what's your profit and loss look like? And they can't tell me. Most agents can't even tell me what their true split is because they're not looking at their pay stubs. They're not looking at their deductions. They don't know their expenses. They don't know these things. And I can tell you that any top producing real estate agent in the market knows their numbers down to what they're making per transaction, what they're making per month, what they're making per quarter, what they're making per year, also what they're spending and what their tax liability is. So we're going to touch a little bit on taxes and expenses today. Keep in mind that this is very rudimentary information. This is not going to be any type of course that replaces the advice of your CPA or your wealth manager. It is important that you have a true accountant, okay? Especially if you are not skilled in taxes in general. So definitely go out and get yourself a great CPA, lean on that person as part of your overall team and extension of your business. This person can really help you structure things the way they need to be, understand what you can write off and what you can't, and how to pay those quarterly taxes, how to save for your tax expenses, and let you know exactly what your liability is going to be or, forecasted to be at the end of the year. One thing I never want any Realty One agents to do is get themselves into a bind where they didn't account for taxes. It's the end of the year and oh no, what are you going to do? You have this big tax liability. Now they start leaning your property or leaning your payroll. I mean, I can't tell you the number of instances that I have met or have heard of agents who end up in a real bad tax liability. And I just want to be very clear that the IRS does not mess around. They don't care that you didn't properly plan. They want their money. So let's start talking about the very basics of taxes and expenses. So you're not just an agent, you're a business owner. And I need each and every one of you to start repeating that in your head over and over and over again until it is the only phrase you know. You're not just a real estate agent, you are a business owner. So you need to act like one and be educated like one. So as a 1099 contractor, you are your own business in the eyes of the IRS. You are a business owner, okay? So unlike traditional employees who receive an hourly wage or salary and there's deductions taken out of your paycheck for taxes, us as real estate professionals do not fall into that category, which means we have to have self-discipline and the education and the knowledge to understand that we need to withhold our own taxes so we can pay those later on. If you have poor financial management, it is going to equal a lot of added stress, debt, and IRS trouble. And like I said, the IRS does not mess around. They don't want excuses. They don't want, well, I'll pay you when I can. The IRS wants their money when it's due. So if you start making better financial planning, you'll definitely have greater peace of mind and you'll have additional profit, because one thing that's important to understand is if you're not paying your taxes when they're due, they're going to hit you with what? Has anybody ever paid one? Holler out if you know. What are they going to hit you with if you don't pay your taxes on time? Nobody? A penalty. You get charged a penalty. So you actually end up paying more taxes. And trust me, you don't want to pay more taxes than you have to. So we want to make sure that these taxes are paid on time and that you're paying the right amount of taxes. All right. So what is a 1099 contractor? For those of you who are not familiar, is you're not an employee. You run your own business. You'll receive a 1099 NEC form from your brokerage if you earn more than $600 in commission or other fees. So $600 is the limit. If you make more than, and I hope everybody on this call is making over $600 this year. But if you make more than $600, you're going to get a 1099. You have to pay self-employment tax, which is about 15.3% on top of your income tax, just depending on, certain situations. And there's no benefits and no tax withholdings. It's all on you. So as a 1099 contractor, we're not withholding any taxes from your pay. So your pay is your gross pay. It's not the same as when you work an hourly job and then you say, okay, well, my pay this week is $1,500, but the actual check that I'm getting is only $900 because they've taken out for, all of my taxes and unemployment and all of this other stuff. None of that is withheld with a 1099 position. All right. So your tax responsibilities, know what you owe. What are you responsible for? You're responsible for federal and state income taxes, self-employment tax, which includes Social Security and Medicare, and you are required to pay quarterly estimated tax payments. Okay. And those are due April, June, September, and January. Okay, so quarterly estimated tax payments. I can tell you the most agents are just paying at the end of the year when they file their taxes. And that includes what? I said it earlier. Somebody yell it out. What are you getting hit with?
Penalties.
Penalties. Thank you. You're paying more taxes than you need to because you're not paying them quarterly. Okay, so my tip is that you set 25 to 35% of your income aside in a separate account for your taxes. And this should be in a interest-bearing account, okay? And why I say 25 to 35%? Well, because that's relative to what you make. If you were a top producing agent, then I would shovel away 35%. But if you're a newer agent just getting started, you're not doing a lot of deals right now, then 25% may be safe. But again, talk to your CPA to figure out what is best for you. So go ahead and put that into a savings account, a money market. I'm a money market fan. Whatever it is that you have set up, you should be putting that money aside and paying your quarterly estimated tax payments. Now, how do you figure out what your quarterly estimated tax payments are? Well, you talk to your CPA. Your CPA will be able to run your previous year's numbers and talk to you a little bit about what your goals are for the current year. And they will be able to give you quarterly tax tickets and estimate what you should be paying for each quarter. Okay, you can do it on your own if you're very tax savvy, have an accounting background, absolutely, if you do you, but that is usually the easiest way and the most responsible way to do it. What can you deduct? Okay, there's lots of confusion on what you can deduct and what you cannot deduct from your real estate business. So some very common things to deduct are marketing and advertising fees, and those include if you're doing your own signs, if you're getting custom printed flyers, if you're doing boosted ads on social media, whatever that looks like to you, your marketing and advertising costs are going to be a big part of your tax write-offs. Home office or desk fees. Now ask your CPA about this. Okay, so I have this on here as home office or desk fees, but it does require additional conversation because if you're home office, if you're deducting part of your home office, that does come with other rules in regards to your home itself and when you sell your home. So please talk to your CPA. We're not going to go into too much into that right now, but do talk to your CPA before writing off your home office fees. But one thing that you can understand is the items that you buy for your home office that you are using for your job and not for personal. So for your job are tax deductible. So let's say you have your home office set up and you have a computer at your home office and you have a printer that you use just for work and you have a case of paper that you're using just for your job and not for personal. Those items are tax deductible. Okay. Real estate, education, and license renewals. As you guys know, we're getting ready to renew next spring. It's a renewal year in May. So if you're doing any education or license renewals, those are tax deductible. So you want to make sure that you are deducting those. If you're doing any type of enrichment courses that you have to pay for, those are tax deductible. So if you want to get your trying to think your buyer accreditation, I can't even talk today, but you want to be accredited buyer's agent. Thank you. Can't get the words out of my mouth. So if you want to get your accredited buyer agent credentials and you go through those courses, that is an enrichment course. It's still considered education, tax deductible. Brokerage fees. So all of you guys pay a certain amount per month for your systems and services here at Realty One. Those are tax deductible. So please don't forget to include those in your deductions. Board of Realtor dues. So if you belong to the Board of Realtors, that's an association fee that is tax deductible. Your MLS charge. Now, most of you on this call are on West Penn. Some of you, like Jamie, she's in 3 of them. So that's an expense. Jamie has 3 MLSs because of where she's located. So they are all tax deductible. Mileage or auto expenses. Please make sure that you're tracking your mileage. Okay, so the rule is that you have to track your mileage from start A to start B. So how long was the trip? What was your starting mileage? What was your ending mileage? Was it used for work? Was it used for personal? And you can do this in a simple log book, which is what we used to do, showing my age here a long time ago, because we didn't have these nifty smartphones. When the BlackBerry came out, I thought that was like revolutionary, just so that we're all clear. But you can do those really easy. There's a lot of apps that you can use on your phone. Mile IQ is my personal favorite. I know Rebecca uses it as well. But it literally tracks everything. It's super easy to categorize, and you can send a report to your CPA at the end of the year that is really easy to digest. Client gifts, closing gifts. If any of you guys are doing closing gifts, swag giveaways, those types of things, they are deductible with limitations. So talk to your CPA about those limitations. Office supplies. So if you're buying a laptop for work, a printer, etc., a phone that you're using only for work purposes, those can be included in your deductible expenses. Phone and internet. So if you're doing phone or internet at your home office, a portion of that can be as part of your deductible expenses. And meals and entertainment. So this does not mean like date night with your partner. This means if you're meeting a client for coffee, or if you meet a client for lunch, those are your meals and entertainment. If you do a client appreciation party, that would be considered meals and entertainment. Understand that not 100% of it is deductible, but around half of it is. There is also limitations with meals and entertainment, so please make sure you're talking to your CPA. It's also great, and I keep saying talk to your CPA. We talk to our CPA not only for what we've done in the year, so the end of the year stuff, but also what we are going to do. So keep that in mind too, is that we will talk to our CPAs and say, hey, we're kind of planning on doing this. Like, what's that look like for our taxes? Is it tax deductible? Is it not tax deductible? Like, where is this sitting? So that's a great way. Once you get a great relationship with a CPA, you can bounce those ideas off of them before you're making business decisions to see how that will affect your taxes, how that's going to affect your profit and loss. And a CPA does more than just file taxes. They can actually help you build and run your business from a financial aspect if you are getting the right accountant. Questions so far? No? Is there anything on this list, or maybe that's not on this list, that you guys are writing off on your taxes that you'd love to share with anybody else, especially the ones that are new to real estate, because this is super important? No? Oh, yes.
Just as far as like for savings and stuff like that, sorry, I kind of had to step away for a second, but as far as savings, I do First National, and I created a 9 months Flex account. And so every time I have a transaction, I deposit 30% of it. And with that, can only, you can deposit as much as you want, but you can only take out like once a month. So it kind of helps you so you're not like tempted to just like pull it out constantly. So it kind of makes sure that you're like managing your money well.
No, I love that. I love that. Now, is that an interest-bearing account or a no interest account?
It is. It builds interest. Yes.
Right. Right. Any kind of account that builds interest on the money that you're saving is key. Like I said, you've heard me talk on other trainings before about how like I love playing the money market game. Love playing the money market game. It gets super high yields. My money remains liquid. I'm a huge believer in saving for your taxes and having at least a 6-month cushion in there. Like I will eat everything in my freezer and skip every night out for date night before I let that go below a 6-month reserve to live comfortably. And I'm not talking about just the necessities, just not just the, the mortgage and the utilities. I'm talking to live at a comfortable rate at which I live at now. But understand when you're putting this money away too, you're also making passive income off of this money, especially if you're putting it into an account that is a high interest bearing account. So I think that that's super important to mention as well, especially if you're trying to make sure that you're saving for your taxes in a rainy day and trying to build wealth at the same time.
He didn't have several. Yes, he does have several. He just did them all
Here.
one day. It doesn't really.
All right. Next, how to track your expenses. Get organized or get overwhelmed. You have to know what your expenses are, or you're going to be easily overwhelmed. You're not going to be making the right financial decisions when it comes to your business. And it's going to be really overall really hard for you to reach your goals. It's great to have goals that says, okay, in the next 12 months, I'm going to sell X amount of houses. But really, what does that equate to financially? And you need to, as a business owner, understand what that means on a dollars and cents level. So some best practices to use is to start using apps like QuickBooks Self-Employed. You can move up from there if you want, but I mean, as an individual agent, if you're just starting out, really taking charge of your business, QuickBooks Self-Employed, there's an app that you can use on your phone. There's an online program that you can use. You can go the old school way like my husband does and go buy the CD-ROM at like Sam's Club or Costco if you really want to. But I don't even know a laptop that's out now that has a CD-ROM available. So you do you. There's no judgment here. But doing QuickBooks Self-Employed will really help you start to take charge of your business. What I love about it is that you can pull up your dashboard at any time as long as you're putting in the data or connecting it to another program that feeds it the data. When you pull up your dashboard, it is going to show you how much money you brought in, how much money you spent, and what your profit and loss looks like. When you start changing the way you're looking at your real estate business, it will change your life. And I promise you that. Know the dollars and cents. Try something like MileIQ to track your mileage or Expensify. There's a lot of different apps out there. These are just a couple that I've had experience with in the past, but definitely look into those apps, look at the reviews, see what they do, and find something that works for you. And that's the key, is find whatever works for you. There's the best systems in the world, but if we don't use them, they mean nothing. So find something that works for you. Keep a dedicated business bank account. Do not commingle your funds with your personal funds. I suggest that everybody have a business bank account, and it doesn't have to be fancy. It can just be a checking account dedicated to your direct deposits and your expenses. So when you get your direct deposit, it goes into your business account, and then you can move money from your business account into your personal account for things like spending, okay? For things like paying the mortgage or paying the electric bill or whatever you're going to do. But if you have a dedicated business bank account, this helps you understand the flow of your money through your business way more accurately than just kind of like throwing it into your personal account where everything else lives. Use a dedicated credit card for expenses for your business. Okay, so you should have a dedicated credit card. Do not swipe your debit card for your systems, your services, your gas, your whatever. You should have a dedicated credit card for just your expenses through your business. And I say this for a couple reasons. One, it becomes super easy to track what your expenses are on a month. You can go onto your credit card statement. I can tell you, I have an Amex. I go into my Amex account. I can see what I spent it on. I can categorize it. I can pull reports that are able to be easily sent over to Kathy. And it just makes things so much easier. When I'm swiping my debit card and it says Amazon, Amazon, Amazon. Well, sometimes I buy stuff for my house for Amazon. And sometimes I'm buying stuff for my kids for Amazon. Sometimes I'm buying stuff for real estate with Amazon. And how am I then, an entire 6 months later, supposed to know which Amazon charge is for business and which one's for personal? Okay. Something will happen, and it's going to be one way or the other. Either you're going to write off something that's personal, and then you're going to get pinched when you have an audit. And that's just a whole situation we don't even want to dive into. Or you're not going to write off something for your business that was truly a business expense, and you're going to pay taxes on income that you didn't truly receive. So it's important to have a dedicated credit card for your business expenses. Okay. Update your income and expenses weekly. Don't get overwhelmed and let it build up for a year. You know, a lot of times, during tax times, agents are going crazy because now they're pulling statements and they're pulling their debit card reports and they're pulling their credit card reports and like, what did I pay and when did I pay and did I pay it in cash and did I pay by check? Did I do it on my debit? Did I do it on my credit? I don't know where all of these expenses are. And then everybody's having a panic attack when taxes are due. Okay. If you are updating your system weekly, it could take you all of 5 to 10 minutes a week. Time block off that time, whether it's on a Monday or on a Friday, jump in that system, update it real quick, lay your head down on your pillow at night and know that things are taken care of. Okay. Use a monthly profit or loss statement to spot trends. If you are correctly using your accounting platform to track your income and expenses, you're going to be able to see your profit and loss at a glance. You're going to be able to open your dashboard and say, I'm ahead this much, I'm below this much. And then according to where I'm at this year, as opposed to where I was at the same time last year, either I've grown and I've made money or I'm losing money or my expenses don't look right. What am I doing different? Do I need to cut expenses? Is my income off, but my expenses are the same? So do I need to make adjustments? This is really going to help you grow your business the way that you need to. And make adjustments so that you're able to hit your goals, so that you're able to grow your business. Separate your business and personal finances. Avoid the mistake most agents make. So I just want to reiterate, open a separate business checking account, use a business credit card for trackable spending, and pay yourself from your business like it's a salary. And why does this matter? It's easier and clearer taxes, cleaner books, and more financial clarity. Okay. If you are paying yourself like it's a salary, and it's not really a salary, but you're paying yourself a predetermined amount every week or 2 weeks or every month or whatever it is, it makes it a lot easier for you to adjust your spending and put money back into your business according to plan. Okay, so this should all be planned out. It's also going to help you understand when you're not making enough money and when you need to change your practices. Yeah, Rebecca.
That was actually advice too that I got from the CPA that I used. So I have my business checkings and then my personal. So whenever I want to go buy something personally, I just transfer the money from my business account to my personal account. So I try to keep everything separate.
Absolutely. Yeah, it is imperative. It really is. Don't muddy the water. And I know a lot of agents okay, well, it goes into my regular account and then I pay my bills. And when I need to buy paper and I need to buy, a new cord for my computer, I need to buy a new monitor, I just swipe my debit. And Can it work? It can work, but why make it harder than it has to? And those people can never truly build or scale their business because you need to think like the CEO of your business. And it starts here. It starts with your money. It's your money. You work really hard for your money. There's not a person on this call that does not work their ass off for the money they receive. Let's treat it like what it is. It's a business, and we can't grow and scale until we're acting like a business. All right, quarterly taxes, what, when, and how. Don't wait until April to pay your taxes because, again, if you wait till April, what do you get? Thanks, Kathy. Kathy yelled penalties from the back. All right, the IRS requires estimated payments 4 times a year. So use Form 1040-ES to calculate what you owe. Pay via the IRS direct pay or through a tax app. And track your net income monthly so you're not surprised. Okay, definitely work with a tax pro to avoid penalties and additional interest because we all know that we don't want to pay more than we have to. And I can tell you that I am prime example number 1 of not paying quarterly taxes until I got my books right and understood how much more I was paying by procrastinating. So make sure that you're paying your taxes on the estimated payments. And here's the thing, okay? We are in a commission-based business. This is all estimated. If you overpay on your estimated taxes, what do you get back at the end of the year? Anybody?
A refund.
A refund. Thanks, Jamie. Thanks, Kathy. You get a refund back, right? Now, I'll be the first to tell you that I don't like having the IRS hold more money than they need to because I'm not making money off my money. And I like to make money off my money. But I would much rather pay a few dollars more than I had to and have them give me a check back like it's Christmas than to not pay and then owe them a handful of dollars because I didn't pay it. So don't worry, at the end of the year when you do your taxes, if you overpaid, you get a refund just like anybody else. All right, year-end prep and CPA tips. Please, please, please don't DIY your taxes. And then you see in parentheses there, unless you know exactly what you're doing. I don't know anybody on this call that has a CPA license. Maybe somebody does. Maybe somebody was a CPA in their previous career. And if you are, that's great. But if you're not, do yourself a favor and hire a CPA. It is well worth the investment. Just so that everybody knows, H&R Block does not qualify as a qualified CPA for real estate. I have a lot of people like, I got H&R Block. Not the same. Not the same. Hire a real estate savvy CPA. Okay. Especially if you're doing a lot of business, especially if you want to do a lot of business and you're quickly growing your business, a CPA should be part of your overall team for the business that you're running. All right. You want to provide them with, at minimum, and these are just the minimums, your 1099s and your zone transaction log, your expense reports, your mileage log, your bank statements. There's going to be other things that they're going to need, but these are just the very basics. When you go in for your first appointment with the CPA, what you should have in hand. Please ask them if there's anything else that you should be providing. And while you're there, have a conversation with your CPA about SEP IRAs or solo 401ks and other types of tax shelters, okay? We're not going to go into that. Talking about those types of things without having a wealth management license is just not even a gray area. It's a red area. So we don't go into any type of training when it comes to IRAs, 401ks, tax shelters at all. We leave that to the professionals, but just tell them that I told you to ask and open up that conversation with them. All right, final thoughts. Money flows to those who manage it well. All right, give me your thoughts, your suggestions, or your experiences. Anybody? Let me ask you this. Who currently has a CPA as part of their team?
I do.
Excellent. Has your CPA helped you with finding additional deductions or making changes into your business?
Yeah, definitely 100%. He can look at everything and then determine, what the best route to go to make sure you know, I'm not leaving money on the table.
Yeah. And that's so important. I mean, we work so hard for every dollar that we bring in. We really do. Like I said, there's not a person on this call who isn't a hard worker. And I can say that with 110% confidence. I mean, you guys go out there and you hustle and you kick ass every stinking day and you give it your whole heart and soul. Do not leave money on the table. Do not pay more than you have to, just because you don't know what you don't know. And that's where I think a lot of people fail, is that when we start to think that we can do it all, we can't grow because you don't know what you don't know. So having a CPA is so important. Managing your taxes, but it's going to start with you to understand where your dollars and cents are. It starts with all of us, making sure that we know where every penny is and managing it well. All right. Well, next week, we're going into lesson 4, high-level productivity habits for running your business. I know we've had other habits training, like Top Producer has a habit training, but this is about business management and not so much about our, being in the business, but working on the business. And what are some productivity habits that we should have as business owners and not as agents? I think they kind of flow over and kind of cover both, but we're really going to be focusing on running and operating our real estate business from an owner perspective. So we're going to talk about those productivity habits, getting into some of the things that you should be doing if you're not doing already, or maybe talking about tips that if you are already doing them, how to do them more efficiently and how to time block and time manage a little better, what we should be carving out time for, and what we should be spending time on as the CEO of our business. So as I always do, I'll hang on the line for any additional questions, comments, suggestions. So feel free to stay on the line if you want to chat more. But thank you guys so much for showing up today. You guys always show up and you're always here 100%. Thank you so much. And I will see you next time.
Thank you, Christina.
Thank you. Have a good one.